Now let me start with the first very important concept, that is a gross domestic product. Now what do you mean by gross domestic product? Understand this. Let's start with an example here. Imagine this is a particular country. Either use the term country or I'll use the term economy. Okay. So imagine this is a particular economy. Within this particular economy, there will be companies, there will be individuals, there will be MSMEs, micro, small, medium enterprises. There will be certain units which are started by the owners themselves, that is self-employed units. So in this particular economy, whatever is the overall production of goods as well as services, is it okay? I'm considering a particular economy, and within this particular economy, whatever is the market value of all the goods and services. I'll repeat the statement here. In this particular economy, whatever is the total market value of all the goods and services which are produced in a specific time period is called as GDP. I'll put it in statement again so that it is clear for you, and this is important to understand. Within a particular economy, or else they will use the term territory, whatever is the market value of all the goods and services which are produced for a specific time period is nothing but GDP. Now imagine in this particular economy, 10 goods have been manufactured and the market value of these particular 10 goods is, let's assume, 10 rupees. I'm just taking simple numbers here. So 10 goods, market value per good is how much? 10 rupees. So total market value of goods and services produced will be how much? 100. So this is nothing but a concept of a GDP in this particular example. Now there are certain points to be understood here. First, whenever I say market value, what do you mean by this? Whatever is the market price at which the goods are sold and bought in the market is called as a market price. Now there will be certain goods which are also referred as intermediary goods. What do you mean by intermediary goods? Understand this very carefully. In case of the concept of intermediary goods, these are nothing but the goods which are used in the supply chain process or in the overall production supply chain. Let me give you a simple example. Imagine here is a car being manufactured. To manufacture this particular car, you will require thousands of raw materials. Let me take the example of a tire. Now to manufacture this particular tire, you will require rubber. Now have a look at this. Rubber is first produced and this will be converted to tire. Tire will be used to manufacture a car. Now what we purchase in the market is nothing but a car. So what final consumer purchases in the market is nothing but the concept of a final good. But to manufacture the final goods at various steps, there are different raw materials or intermediate goods which are required or which are used. Now always remember this. Whenever I say market value, I'm not considering the market value of these particular intermediate goods or raw materials. I'm going to consider the market prices of these particular final goods only. If you ask me why, sir, why are we exempting these particular intermediate goods? This will happen for a simple reason. If I count the price of intermediate goods as well as the final goods, that will lead to double counting. What do you mean by this? Let me take a very simple example. In this particular case itself, if I count what is the market price of the tire and also count what is the market price of the car, is it okay if I say that the market price of the car will be arrived after considering the cost or the price of the tire itself? Because obviously when I purchase the car, the tires are the components. Tires are already fitted. So when the car is sold to me, whatever the price is, out of this particular price, the market price of the tires also has been accounted for or has been included. Now if I count the tires also separately, car also separately, then that will also lead to double counting. So we generally don't consider whatever is the market price of the raw material consumed, whatever is the market price of the intermediary goods consumed. We directly count whatever is the market price of the final good. And next very important point, whatever goods are resold in the market prices of these particular goods is also not counted. Let me repeat it. The goods which are resold in the market prices of these particular goods will not be recounted or will not be counted in the calculation of GDP. Why? Imagine a particular good. Let's take the example of this particular pen itself. So I'm a final consumer of this particular pen. Now this particular pen, imagine, was manufactured last year. So when this particular pen was sold by the company to me, it already is a part of GDP of last year. So if I resell this particular pen to you people, imagine you will pay X amount of rupees for this. This particular pen is not produced in this year. You can understand this. The pen has not been produced in this year. Rather, the pen which has been produced earlier has already been sold in the market is being resold to you. So any goods which are being resold in the market, the prices of these particular goods will also not be counted in calculation of GDP. In the same way, the transfer payments are done by the government is also not counted in the calculation of a GDP. Now, what do you mean by transfer payments? Government will provide certain support in the form of a transfer payments to beneficiaries. For example, pension, for example, scholarship. These particular transfer payments are also not counted in the calculation of a GDP. So remember these particular points with respect to calculation of a GDP. The next very important point, I said that GDP, gross domestic product, is the market value of all the goods and services which are produced in a specific time period. Now, what do you mean by this particular time period? Remember this very carefully. We calculate GDP for a quarter, we calculate GDP for a half a financial year, and we also calculate GDP for a full financial year. Now, what do you mean by all these three terms? Understand this. Whenever I say calendar year, this particular calendar year will start from 1st January and will end on 31st December. Whereas this particular calendar year is not chosen as an accounting year or a financial year in case of India. Rather, what we do is we'll start our accounting year or a financial year from 1st of April, let's say in this year, and we'll continue this till 31st of March of next year. So I'll repeat it again. The financial year in case of India, which is used for accounting purposes, will start from 1st April of this year and will continue or will end on 31st March of next year. That 1 year or 12-month time period is considered to be a financial year. Now, this particular financial year is broken down into 4 quarters of 3 months each. For example, have a look at this. I said the financial year will start from 1st of April. So, April, May, June is 1 quarter. July, August, September, 2nd quarter. October, November, December, 3rd quarter. January, February, March is the 4th quarter. Is it okay? Just like this only, we'll take 2 quarters, merge them, we'll make it as half a financial year. For example, 1st quarter plus 2nd quarter is first half of financial year. Then 3rd quarter and 4th quarter will be 2nd half of the financial year. Remember these particular concepts. Now, come back to the original concept here. The GDP is measured for a specific time period. That is, we measure GDP for half a financial year, quarter of a year, or quarter of a financial year, or full financial year. Now, this particular concept of measuring GDP quarter wise, remember this particular statement also. The concept of measuring GDP quarter wise was started back in the year 1996. Until that, we did not have this concept of measuring GDP quarter wise, but post 1996, we have been measuring this particular GDP quarter wise also. And that is the precise reason very often you will keep on coming across the statement saying that in the first quarter GDP has contracted or GDP has expanded, so on and so forth. But before I go forward, one more very important point with respect to quarter wise GDP. Whenever they give you data with respect to quarter wise GDP in the newspaper, always remember this, they are making a comparison with respect to the same quarter in the financial year or the previous financial year. Now, what do you mean by this particular statement? Let me give a simple example. Imagine for the first quarter of a financial year 2022, they are telling you the GDP data. They'll simply say GDP growth rate is this much. Now, what do you mean by this? It simply means they are comparing the first quarter data of financial year 2022 with the same quarter, that is quarter 1, but for previous financial year. Previous financial year was financial year 2021. So this is how the quarterly wise data is published in the newspaper. Do not get confused. Now let me go forward. As of now, what we have seen, we have taken care of what do you mean by GDP? GDP is gross domestic product, market value of all the goods and services which are produced in a specific time period in a particular economy or in a particular territory. Now, how this particular GDP is measured? GDP is measured under 3 methods. These 3 methods are output or product value method, income method, expenditure method. Is it okay? Output or product value method, or some books will say production method. Second one is income method, and the third one is expenditure method. Now, before understanding this, please understand this statement very, very carefully. Whether I calculate GDP through first, second, or third method, the GDP value will remain same under all the 3. Is it okay? I'll repeat the statement here again. Whether I calculate GDP through production method, through income method, or through expenditure method, the value of GDP will remain same under all the three. Yes, understood that difficulty is in terms of a calculation and there will be certain discrepancies, but the NSO, National Statistical Office, this is the main authority which is involved in the publishing of the data related to GDP, will use certain adjustments to ensure that the value will remain same under all the three heads. Why the value remains the same under all the three heads? To understand this, there is a concept called as a circular flow. Now, what do you mean by circular flow? I'll use a statement, then I'll give an explanation here. The expenditure of one is an income for another in the economy. What do you mean by this? Follow the example very, very carefully. Here is a household and here is a manufacturing company. This particular household will provide labor services to the company. Now, what do you think manufacturing company will do with the labor? Obviously, it will produce goods or services. So, have a look at this. The company has manufactured either goods or services using the labor. Now, for having provided labor, for having supplied the labor like this, the household would also expect something in return. That is, it actually wants what? Wages. So, have a look at this. From one side to another side, from the household to the company, the labor has been supplied. And in return, this particular company has supplied or paid wages to the household. So, on one side, goods and services have been manufactured, and on the other side, the households are sitting with wages. Now, don't you think the households will require goods and services for consumption? For example, households will require food articles, households will require milk, households will require oil, atta, so on and so forth. So, what will happen? Households will use these particular wages, pay for these particular goods or services. Households will use this particular money, pay for the goods or services, and on the other hand, the company will supply the goods or services to the households. So have a look at this. Expenditure of one becomes income for another. Now I'll explain the same thing using this particular example. For this particular company, for this particular manufacturing company, expenditure or cost incurred is what? Wages. So company is paying wages, and this particular household which has supplied the labor is receiving the wages. It becomes income for the household. So cost for the company is nothing but the expenditure, that is the wages it has paid. But on the other hand, the households which will receive these particular wages, for the households it will become income. That is the reason this particular concept of a circular flow is used to explain how the money or the goods and services will keep on flowing into the system or in the economy like this. This particular company would use the labor, and because it has used labor, it will pay wages. It will use land, and for having used land, it will pay rent. This particular company would have used capital. That is, imagine you are starting a company, you will take a loan from a bank. That is nothing but the concept of a capital here. For having utilized capital, it will pay interest. And finally, have a look at this. Company is different and the owner is different. Have you understand this? Company is, let's say, XYZ. You are the owner of the company. So, to whom do you think the profits of the company will belong? I'll repeat the statement here. Here is a company XYZ and you own the company XYZ. This particular company, let's imagine, has earned 100 crore rupees this year. To whom do you think these particular profits should go to? Obviously, the profits will go to the owner. So, owner would have put in certain efforts. I can understand, just like a labor, owner would have put in certain efforts in this particular company. He has started the company. He is owning the company. So the profits of the company should obviously belong to whom? The owner himself. So this is how the circular flow generally happens in the system. And please understand this. These four factors that I have discussed now, that is land, labor, capital, and entrepreneurship. Entrepreneurship, I used a layman term here, owner. So land, labor, capital, entrepreneurship are referred as four factors of production, and every factor will involve certain income generation. Is it okay? Every one of these particular factors will involve income generation. If you have not understood this, follow this very carefully. You are the manufacturer. You own a company. You will use labor. Imagine I will come to your company and work for you. So for having worked in the company, company will pay me salary or wages. So the salary or wages will become income for me, but expenditure for the company. That is, company has paid, I have received. And second, you are working or you are set up this particular manufacturing facility by taking land from someone else, or you have rented a particular place from someone else. So after every month, you will have to pay certain rent to the owner of this particular place. For the company, the rent becomes an expenditure. It becomes a cost. But for the owner of the facility, it becomes an income. Third one, to start manufacturing, you have taken loan from a bank. So you'll have to pay interest to the bank. Interest for the company will become expenditure, but for the bank will become income. And finally, you have put together all of these particular resources. You started the company, you hired the labor, you took loan from the bank for the company, you are taking care of the functioning of the company. You would also want certain returns from the company. So the profits which are generated by the company will be given to you because you are the owner of the company. This is nothing but profits debited or basically taken away from the company becomes a cost for it, will be given to you, becomes income for you. So this is a basic idea of the four factors of production. And generally there is a circular flow which happens in the economy. That is the precise reason why I said whether you calculate a GDP through output method, income method, or expenditure method, the income or the value that is generated under three heads should remain same. Now, some of you will basically say how you are connecting this with this, how you are connecting circular flow with the three methods. Let me give a very simple example for this also. Have a look at the first one, the methodology to calculate GDP, output or production based methodology. What do we do under this? Whatever is the total production done in the market into the market value. Is it okay? Whatever is the total production into the market value or market price for that matter. Imagine 10 goods have been manufactured into 10 rupees. I'll put it like this. So what is the value? Total value 100 rupees. That is GDP through output or product value method. But please understand, this particular 100 rupees can be derived by taking into consideration whatever is the inputs put in by the company also. For example, the labor cost. For example, the interest paid. For example, the profits that the company wants to generate, etc. So is it okay if I say that whatever is the market value of this particular product is arrived by taking into consideration the cost incurred by the company itself?